Welcome to another riveting edition of Risk and Return. We got a lot going on today. I'm here from Fox Business, Fox News, the New York Post. My name is Charlie Gasparino, and we're with the granddaddy of data, who had an amazing week, I have to admit. I think you hit for the cycle, as they would say. Like, what is that? A base hit, a home run, a triple, a double, and you stole home on top of that. And we say that because, with all due respect, because not only has S3's data been widely cited all over Bloomberg, and one of the top stories on Bloomberg was your data
Bloomberg,
on
CNBC, Wall Street
CNBC.
Journal.
But it was ranked as, from what I understand, one of the top, your stuff on SpaceX, which we'll get into a little bit, one of the top stories, probably the top 10 stories when it came out about the short interest in SpaceX and breaking down the actual positioning, which we're going to get into in a little bit. But also, you're a thought leader now. You are published in the New York Post with a fascinating, I mean, people forget Bob's got like an academic background in history. And, what he did was a sort of a look back at the economic history of New York and how New York benefited from the rank sort of anti-business climate that affected back then, which was like a dominant city called Cleveland. So much so that people should go to the New York Post and read it, so much so that the Rockefellers moved from Cleveland to New York, which I didn't know. Neither did the editors at the Post, but we know.
By the way, that was like the worst trade since the Babe Ruth trade.
Yes.
It was, honestly, that was like the worst trade ever.
Although
and what it
Cleveland
cost
had
Cleveland
some good years after that, but obviously, they didn't become
but
New
I
York,
mean, like,
for sure.
but in New York, I mean, what was fascinating to me is what I realized in writing that op-ed was that Cleveland really lost becoming the next Chicago, and New York became New York. So they were a double loser. They made New York the center of commerce. Yeah, they made New York the center of commerce, and then they could have become Chicago.
Right.
Chicago easily could be Cleveland right now. Easily.
Now, Chicago's moving towards Cleveland. We should point out that Ken Griffin of the Citadel Investment Empire, set up shop in Chicago first. That was one of their big sort of anchor businesses, and now he's gone. He's gone to Florida because of the progressive movement. And we have Mondami here in New York City, who's chasing out businesses, which I'm writing about. But I want to get to your analysis on SpaceX. So this wasn't a classic short squeeze, you're saying?
No.
Excuse me. Yes, on SpaceX. This is not a short squeeze. And you made the same point about Mr. Aschenbrenner of situational awareness. Unpack that a little bit for us.
Okay. So SpaceX is actually kind of easy. The float of the company is actually quite small given the market capitalization of the company. The amount
it hit a new low today. We should point out, not bury the lead.
Yeah, I mean the stock's at 108, right? It was as high as I think the intraday high was something like 225, I think.
Yeah.
So 108. The short interest as a percentage of float is the highest amongst the Magnificent Seven, Magnificent Eight. The notional amount of short interest is second to Nvidia, and yet the float is tiny, right? It's like 4% of the stock issued is the float. Now, just to remind everybody, float means that's what's tradable. And what's fascinating is that even with the amount of shorting that's going on, and we pulled up a chart right here, as you can see that, right? You can see short interest as a percentage of 3%. It's almost triple the amount of every other thing in the Mag 7, now Mag 8. You can look at the actual short interest as a percentage of float, which is almost, is basically, 30 or 40% higher than everything else,
right?
Sometimes double. So, across the board, it's just for these big, enormous, large cap stocks, it's incredibly high. And I think everybody understood the two things affecting the stock. One was that just the amount of froth that was associated with the IPO.
Yeah, the hype of it.
It's
CNBC,
huge,
Bloomberg, Fox
huge.
Business, were
Yeah, it was just,
talking about it. It's
everybody
Elon.
owned it,
It involves
right?
Elon, so he's very hot, so to
Right.
speak. He's comes off the
Um,
screen.
and just so everybody understands at home that, you know, how do we know that this data is accurate? Well, we found something on Zero Hedge where actually Elon looked at this data and said, quote unquote, I tried to tell them, meaning the short sellers, but they doubled down. And
I saw
this,
that. So he
but
gave you
yes,
props.
yeah, he gave us props. Like, obviously this is very important data to him, and he didn't dispute it. He said, from what I understand, this is correct. So
He's been there
um,
before with the short sellers.
he has, and so we'll take that. But I think the point is that short sellers are up about $9 billion in profits, and after today's move, it might even be a little more. So you've got to sit there and say, what is it that reverses that? Because right now the shorts are in control of the stock, and yes, they can buy it back, and yes, they're sure they can buy back the stock.
Yeah, it'll go up a little
Um,
bit, right, when they come to
but
the.
it could go back up a lot. But the question is at what price?
Well, let
And
me ask you this: is the the sort of news that's coming out? There's the end of the lockups, right? The insiders can sell soon, right?
but the question is, there are some insiders that can sell but won't. So Ron Barron's come out and said that. A lot of other different famous
Right.
names in that are close to Elon have said that. So it's very hard to, what's the overhang, right? I mean, it's something like $100 billion, I think, is some by some estimates. Uh, Seems like an inexact science to me to figure out what the overhang is going to be, and but it's there, right? So
Right. So,
people are trying, people are
let me ask you
shorting
this:
into that, knowing that that's coming to the marketplace.
as the granddaddy of data, someone who knows more about shorts than anybody, and the guy that invented the actual gym shorts. Sorry, I tried to make a joke; it didn't work. But in any event, is there any news? The news that's going to come out would be positive for the short end of the thesis on SpaceX, correct? If you're expecting more shares, if you're expecting maybe get in the S&P at some point. I mean, I don't know how long that takes, but
Well, that's the other thing that makes these things remarkable, right? That is, it's really not part of any index, and it still has this much negative sentiment against it. So that in and of itself is remarkable. Just that one factoid, never mind everything else we just went through. So there's just the shorts are in control of the stock price. They will determine how far this thing will go. It wouldn't surprise me to see this thing hit 50, $60.
oh
Wouldn't
my God.
surprise me at all. It wouldn't surprise me.
Now
It really
that's
wouldn't.
now that's a story and a prediction. We're going to hold you to that. Let's go to
You
let's
know,
switch to.
I said it wouldn't surprise me.
Yeah, no, I know. I know.
So, let's caveat that.
Listen, you're
But
the
it
granddaddy of
it could
data.
up
You look at this stuff all day. You
all
have
day
an informed opinion, and we that's what we love you. But let me ask you this, Bob. Let's sort of transition to
to situational
situational.
awareness. Yeah.
I mean, you saw my story. I wrote about it in the post. I quoted various people about try to put this in a broader context that it could be the end of the AI sort of just like a canary in the coal mine that AI boom might be ending. You took a different tact. You said, people think that the short sellers, they did target him, took him out. Remember, he
Mhm.
now did he short? What was interesting is he shorted a bunch of stocks that were negative to the AI boom, and he obviously went long AI stocks.
But here's yeah.
Tell us
So
what
let's
happened
unpack
with
that.
this.
Yeah, let's
And
unpack
then he
that.
went, and then he lost 67% of his in a month. That's after gaining 1,000 over 2 years. So whatever.
So one, Leopold is a darling of Silicon Valley.
Right, Leopold Aschenbrenner is his name.
Eschenbrenner. They hate Wall Street. They think Wall Street are a bunch of stupid people. A lot of people gave him money. And so let me get this straight, okay? You are your portfolio is super concentrated. It's super volatile and it's super leveraged. Nothing bad can happen to you.
Yeah, Could have used a little Wall Street there about leverage.
You know, come on. And then you
It
go
was leveraged
to
by like 400%, something like that, right?
yeah,
4 to
you're right.
1.
Yeah, 4 to
Yeah.
1.
It's like
But by
more
the way,
than,
it could be more. And then
by the way,
then
that's multiples of Lehman Brothers, I believe, when it was.
yeah, but it's different. No, but it's an
I
entirely
mean, I
different
know
thing.
it's apples and oranges, but it's
It's
not all
totally
that
apples and
leverage.
oranges. That I wouldn't. Let's not get into like because one really has nothing to do with the other. But deploying $80 billion, right? If you notice of the litany of things I said, I didn't say illiquid. So what he found out was that when you're super concentrated and you're super levered, it better be in something that's liquid. Otherwise, he'd have nothing left, right? And I think he was down 67% or something like that, whatever it is. But when you get in trouble like that, and your bankers, basically your prime brokers, come to you and they issue a margin call, you put your portfolio out to bid. This is what happened to long-term capital. They had basically got a margin call. They ran out of capital. They couldn't meet it. The portfolio goes out to bid. It leaks like crazy. Everybody's taking the other side of your positions. They're slamming your long positions. They're trying to short your long positions and or buy your short positions if they can figure that out. And by the way, it's not that difficult to figure out because when you're investing that kind of money, you can only invest in how many big stocks can you invest in? It's not that many.
Yeah, and
You know,
he didn't hide his preference.
it
Right.
didn't hide his preference. You knew which sector, like so uh, so this idea that he was being targeted. So we said, well, let's look at our data. What does it say? Lo and behold, actually, a lot of the things he was long. Now we don't know what he was short, right? But because of the 13F filings, you knew what he was long. At least you had an idea. 13F is dated, but we looked at our own projections of what 13F would be, compared that, and said, this idea that short selling took them out was just wrong. It's just people got out of those stocks. There were a couple of stocks in there, T1 Energy, Iron, et cetera. And, you can take a look here on the chart.
Hmm.
There are a couple of stocks where, first of all, most of his portfolio had converts associated with it. So people are hedging those converts. So you can take that right out of the short interest. And you look at the short interest on the stocks. They're more or less down to flat. Now, there are a couple of them where people said, oh, you know what? Actually, I'm going to actually turn around from a hedge position to being outright directionally short, which is T1 Energy and Iran. He held those, and yes, those short positions went up a lot, but they weren't, a massive part of his portfolio. So we just try to debunk the idea that was in his letter that the shorts took him out, because that's just not what happened.
Yeah.
And that's what got a lot of people's attention, because I think he went out and said it took us out. And we said, that's not what the data says. Sorry.
What took him out was he lost a ton of money.
What took him out is the prime brokers wanted their money, and they basically
right.
sold him out. And they went to, the 5 people on the planet. I mean, you don't have to say who they are because everybody knows who they are. They say, would you buy? The portfolio kind of looks like this. Would you buy it?
By the way, they're not.
Once you say that, they're like, once you say it looks like this, then the game's on.
Right. So the prime brokers, are still backing him up, from what I understand.
Well, but
he still has 10 billion under management.
Yeah. Okay. Fine. But you know what I mean. It's like 10 billion gross. Levered how many times? We don't know.
We don't know. He sold.
And by the way, $10 billion gross. That was yesterday. What's today? Who knows? So right. He went from 80 to 10.
45 to 10.
I heard gross position of 80 billion.
Really?
Yeah.
That's new to me. That's wild.
Yeah. So, okay. Fine. But that's what happens. Once you put your portfolio out for bid that way, it's what happened in long-term capital. It's just the carcass is there. The orcas are going to take their slice, and it's just.
That's trading. That's people think it's pernicious and sort of what's the word, vulture investing or vulture. That's what trading.
That's called liquidity.
Right, and it's also called price discovery. That's how you figure a discovery on you figure out. It just people take advantage of blips in the market, sort of. When the markets get topsy turvy, it's literally the market's trying to feel the price,
Yeah.
and and those and that's how it works. And if you're on the wrong side of that trade, sorry, Charlie, shouldn't have
But they're only
levered 400 to 1.
well, but that and isn't that the point? Like you lever that much and things go sideways, the garbage man's there, like the cleanup crew. They're like, okay, their brains are all over the back seat of the car. This is like
Ken
Martin
Griffin's
Wolf.
going to buy.
It's like Martin
Ken
Wolf in
Griffin's
Pulp
going to buy.
Fiction.
Right, Ken
Uh,
Griffin's going to buy the. Remember that?
yeah,
Mr. Wolf. That was
the
so.
wolf. The wolf comes through. Okay,
That was
clean
pretty
up the
good.
brains and let's get him out of here and let's move on.
Right, but Ken Griffin came in and bought it. Probably very cheaply and probably made a lot of money because that's what he
He
does.
did.
He did, and but
By the way, he's one of the few people that could actually do it. There are only a few people that go out there and go, wait a minute,
you
you
know,
want me to do what? You want me to do what?
I don't know him. I don't know him well, but I think the markets are lucky to have him because he does stuff like this. And he got a bad rap on all that meme stock investing for, I guess, helping Melvin Capital or whatever he did back then. It was all of it was a lie. You know what I'm saying? This guy,
Yeah, but
this guy is a liquidity provider in many ways.
he
When you need
is.
it most.
He is. And so the misnomer is like the New York Stock Exchange is 40% of the volume of the country goes through. I don't know if it's that much, but it's pretty close. Goes through Citadel.
Yeah, it's a lot.
Like he's probably bigger than the stock exchange on any given day. So yes, he stepped in, realized what the role is. There's only a few people that can actually do that. I think a lot of managers would go like, you want me to go do something where we can lose $3 or $4 billion? Like I'll fire you. Don't even bring that to my door. But
Well, he's good at sort of
he's good at that. Like
sensing
that's what I'm saying.
value when it's
Yeah.
there, and
Yeah.
he's smart like that, and he's been doing that for a
Very
long time.
But very, very, very few firms out there that can mobilize for that kind of size trade and actually execute.
Right.
It's a pretty incredible thing.
It was an orderly execution too. It wasn't like was it long-term capital got crazy? I remember that got like nuts. I mean, first off, that you needed the Fed was directly involved in that. Getting Wall Street together. I remember covering some of that back in the day when I was at
That's
the
what
Wall
happened.
Street
But that's what happened. Anyway, so that's we've had a very eventful week here at S3 for sure.
Yeah. Literally
what do
in
you
the
got?
middle of the action.
We really were in the middle of it all and still are. There's still a lot to go.
Right. I know. What was your what was the short interest on Syed, the guy that won the Senate seat in Michigan, the Marxist,
You know what?
anti-Israel?
I'll tell you what. 0.
I don't want to. I'm not like
0 because the like look, we don't. Our job is to talk about financial markets, right? We don't have data around politics, and we're not. We've learned the hard way. Like predicting politics is a really, really, really hard thing.
Although Bob,
the one thing. Hold on, let me finish.
Yeah.
The one thing that wasn't really hard to actually understand here is that they let loose this element within the party, and then now they're surprised because it's now a dominant strain.
Oh yeah. That's so true. I mean, it's like I talk to Democrats all the time. They're like, "Oh, this is horrible. They hate Israel. They're for socialism and communism." I'm like, you courted these idiots for years. They're all in the Democratic Party. They're part of your big tent. Get used to it. Now
Van Jones
control the insane asylum.
Yeah, Van Jones had an interesting analogy last night, and he just said,
he's at least. Can I make one point about him? He's a CNN analyst. He's at least intellectually honest. He's a liberal, but he's intellectually honest. He's actually a nice guy. I met him. Met him at a party at Dan Loeb's place.
Least least or most intellectually honest.
He's the most.
Most.
He's one of the
Yeah,
most intellectually honest people of the progressive movement.
but of that movement, and he had a great point last night, which is he said, "Look, this is the mainstream Democratic Party is Blockbuster, and this is Netflix, and the idea you're going to raise money, get the ad people, mobilize it's like it doesn't work. You're losing, and if I'm in that party, and I hear that, if that doesn't mobilize you, nothing will."
Well, they. I keep telling my Democratic friends they should become Republicans.
All that has to
Do you
happen
agree
is
with that?
Yes, Fetterman would be the first, and I think he's just waiting for the right time to do that. I really do.
I do too. I do too.
He
Fetterman,
knows, right?
Pennsylvania senator, the
Yeah,
Democrat,
yeah. He's
famously
waiting for it.
moderate. He's just
Yeah,
because they're going to ostracize him anyway. Because these are the progressive left in this country. They're political animals. I mean, you talk about MAGA. These people are much more loony. They're much more strident. They're much more insane. Listen, these were some of the same people that when Charlie Kirk, the young conservative activist, when he got murdered, they were like saying, it kind of had it coming. I heard him say this. They're nuts. Fetterman, I guess if we were having betting odds, Fetterman becomes a Republican. One thing I will say, though, I noticed where this Michigan guy, El Said's victory kind of sort of coalesces with Wall Street. It was big time on the betting markets. The prediction markets were where people were wagering bets, and the prediction markets were way more positive on El Said than the polls, and way more than would eventually happen. Remember, he only got in by like a percent or less, and the prediction markets had him up, by many multiples of that, obviously.
Well, but there's a bias in the better, right? So,
Yeah.
No,
but people look at prediction markets on so many different things now. Like when I was covering the Paramount Warner Brothers, bidding war with Netflix, that was every day. People were looking at and I would tell them, I said, here's what I know about the prediction markets. Right before Donald Trump won in 2016, they had Hillary Clinton like beating him by like 5 points easy, right?
Yep.
And then by like 9 o'clock, the prediction, and that was sort of stable throughout the whole sort of election,
right?
And maybe even more. By
right.
9 o'clock, it started to switch. So this is not exactly. I don't like its predictive powers.
What I was saying is that the very people betting on that race were between probably 17 and 30 years of age. So
there you go.
So it's a natural outgrowth of their own biases, right? Younger voters are much more liberal than older ones. Everybody knows that, and they're on the prediction markets, and it doesn't surprise me that that's what you saw.
And lack of experience, and like Mr. Aschenbrenner, 29. By the way, guys, what 22?
24.
24. Graduated in Columbia at 19. Went to work at OpenAI, I believe.
No, but you got to understand, this guy is the
He wrote that
darling.
paper, right? He wrote that.
The darling of Silicon Valley. Like some of major heavyweight people gave him money, and because he had convinced everybody that he had a better model than Wall Street. Period. And there's a really great story here, maybe for you, because it really shows there's a split between the two financial power centers. And I don't include energy, I don't include foodstuffs. I'm just talking about Silicon Valley and Wall Street. There's a huge split when it comes to how financial affairs should be managed. And that's the real underlying story with him.
It's interesting.
Yeah.
Wall Street kind of put him out of business in a way.
They did. In a way. I mean, you say as 10 billion, I don't know, who knows? But there's a lot of I- there probably will be a I don't know if it's suable for losing money. I don't know, right? I mean, it's in the disclosure, right? I take high risk positions. This is what I do. Blah blah
This
blah blah
is a
blah.
hard
It
one
doesn't.
to
It
assume.
won't prevent someone from actually suing. I know. I get that. But there's an underlying thesis here that Silicon Valley knows more and it knows best about
Yeah.
everything. And
Well,
it was expressing itself on Wall Street through this guy. He's the vehicle for that.
it's an interesting observation. I don't think he has much of a loss. Anybody has a lawsuit against him unless he stole,
I don't think so either.
right?
But
So because
no, 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 no. This is not. Whoa, whoa, whoa. Let's not even go there.
and he
It's not
didn't.
about that at
Yeah,
all.
he didn't. Right.
It's not. Let's not
Right.
go
That's
there.
like a Sam Bankman-Fried thing, maybe, but
Well, but like
but he didn't.
the the provision of liquidity gets confused with, hey, you're taking money from me. It's like, actually, no, sorry, you didn't make your margin call. We own it now, and we're going to do with it what we want, and we're going to give it to this guy. And that's just the way the world works. So,
Absolutely.
sorry.
Tough shit, guys.
Yeah, tough shit. I mean, that's it's big league baseball, right?
I got one more story, and then we're going to get into your stuff a little deeper. I'm working on this thing with Kalshi. Kalshi this week was sued by the New York State Attorney General's office. This is the big prediction market, saying that they're actually running an illegal gambling operation. Now, if this suit is successful, how can any of these prediction markets actually exist? I mean, because it cites not just now, New York has all these states have quirky things where they regulate gambling and they regulate particularly sports, right? But this goes beyond that. This is like everything it does, which has been sort of certified by the federal government, the CFTC, as a futures trading vehicle, is kind of illegal in New York, and that's one thing. The other thing is like what I found odd is that um, the they just singled out Kalshi. They didn't like this is a civil case, by the way. They didn't charge Polymarket or no, you could charge Robinhood. They do this some of the same stuff, right? They do all sorts of contracts, gambling, and all this stuff. But they went after Kalshi. It's a very strange case. I'm trying to like get some answers out of Tish James' office, which they say, oh, we have to regulate gambling because it's bad and kids can gamble. By the way, people who are, I think you can't gamble in New York like legally. Forget about bookies and all that. Legally until you're 21, but because this is, Kalshi's a futures market, you're 18 and you can tap into its services. Um, but they still haven't explained to me, and hopefully they do, like why these guys and why not the others? Because how many of these books are there that they didn't? I mean, they didn't sue Polymarket. They didn't. Who's not? I don't believe they're registered. They didn't sue Robinhood. They're not registered. By the way, if you kind of extrapolate what they're saying about Kalshi, you could make a case that maybe the CME is operating because you can buy futures contracts on various things on this through the CME, right? Am I missing something here?
This has been going on for 150 years. So there were court cases at the turn of the 20th century. There used to be something called bucket shops where you could go in and basically gamble on the stock market without actually owning any shares. So, okay, it was basically a very primitive form of a socially mobilized prediction market. And there are very many, the precedent for law that established what is speculation and what is not. In other words, what's gambling. There are many lawsuits, and if I remember correctly, because I wrote about it in my book, that this idea of speculation weaving in and out of American history, part of that was that the New York State sued the New York Stock Exchange, and they sued a bunch of individual investors. And said, "You guys are gambling. and the courts actually struck it down. So there's the whole idea of what was a financial contract came out of these two cases, and I want to say
I'm going to mention that in my story.
I'll give you the precedent, the court precedents, and the law cases.
And give me a quote.
I'll give you a quote. So I'll look it back up. It's just it's been a while since I looked at that, but this has been going on forever. It's possible that they it's possible that Letitia James is sitting there going, well, the way these guys are incorporated, or maybe they're here in New York State, whatever, therefore we can, we've got cases on the books in New York State,
right,
that are literally 100 and something years old that can support. I'd be in the brief. I'll bet you they mention one of these cases. I'm almost sure of it.
Yeah, I read it. I think so. Now it's coming back to me.
It's coming back to you, right? Yeah.
All right. Well, that's it for me this week, Mr. Sloan. You had an amazing week. We gave you kudos.
Thank you.
On all your stuff. Let's set this table for next week, where we're going to pat you on the back some more. Go for it.
Okay. So last week we had two picks. We had International Paper, which is a bullish call, which was correct. It was up just about 2%.
Right.
And we had Regeneron, REGN, which is a bearish call. That was up 6%. That was incorrect. This week, we have a newer earnings picks. Datadog, D-Dog. I love that. I love that ticker. We think that D-Dog has a bullish setup. I mean, that's a mixed metaphor. Into Thursday morning, that's using how we think short interest predicts price action coming out of an earnings call. So D-Dog bullish, set up for tomorrow's Thursday morning's earnings. Next pick, we have Take-Two Interactive, which is the video game holding company. Obviously, they do a lot of different things like Grand Theft Auto 18.
Oh, I love that.
Everybody, well, the whole world does. Yes,
I don't.
And we also think that this is a bullish setup coming into Friday morning's earnings. Price is up over 8% of the last 3 months to 240. Short interest up to 16% or 7 million shares. So you can see the short interest rising as price. You can see that there's a pretty good correlation between the rise and fall in short interest and price action just by the chart there. So,
all right, is that it?
No, we're going to talk about.
I've never tapped your brain. Your expansive.
No, we've got a couple of different things. We got a couple of different things. if we can put them all up there, we got a ton of different things. So we spoke a little bit about SpaceX, and
they had a great quarter. They did have a good quarter, right?
They did. The thing that is mind-boggling to me is, and Charlie, you're much more versed in this than I am. They raised $100 billion. How many government agencies are funded with $100 billion? I mean, not the FDA, not the SEC. You could name not.
I mean, we spend multiples of that.
Not the Interior Department, blah, 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 blah,
and stuff like that. But yeah, you're right. The agencies themselves do not have that.
Agencies themselves, they have a couple $1 billion, $3 billion, basically short of the Pentagon. And I don't know, maybe the NSA and the CSA and the CIA. I think this is amazing, some money. So they're privatizing all the things they want to do in outer space, produce zero gravity.
Well, the Pentagon actually has a budget of 1.45 billion.
Trillion. No, I get that, but I'm just saying it's in that category. Like this is an enormous sum of money. Right?
Yeah.
It was some of the biggest things we have. And I wasn't saying it's equal to the Pentagon. I'm just saying
no, I know.
There aren't that many more. And it takes the Pentagon to be more than this. But all the things they want to do in outer space, and energy-free data centers, better drug development and zero gravity, et cetera, et cetera, et cetera. But they're spending a lot of money too, right? So their capex of $18 billion, I think that freaked people out, and so that's why the last before we got on the show, we saw it's $108. Like I said, it wouldn't surprise me if we saw something much lower than a bounce. The
Uh,
shorts are in control and making a lot of money.
the State Department has a budget of 51.9 billion. So
Yeah.
you're right.
So it's 2 years of running the State Department, basically. So,
Yeah.
this is not crazy sum of money. So anyway, everybody's waiting for unlock. We covered that before, but we thought we'd give you a little picture. When we go next, this is interesting. In dollar terms, in spite of it not being part of any real index, the short interest of SpaceX is larger than Tesla.
That makes
And
sense for a lot of reasons.
in what? In 60 days.
I mean, the
So
shorts did get crushed on Tesla.
they did, but it's not it's not stopping people.
Yeah.
The one thing people have to understand about people that short stocks for a living, they will bet against you. If they think they're right, they will bet against you for 10 years in a row and lose money happily.
I've seen
They
that.
will.
I don't get it.
They will do it.
I don't have the testicular fortitude for that.
It's they definitely have there's a pugnaciousness in the way they do things, and there's a refusal to admit that the numbers are incorrect, due to market sentiment that makes this such great soap opera.
I know.
And you're
Do they
seeing
trade? Don't they trade around it too a little bit? Don't they? Or are they just all short? I mean, I've heard both.
your investors pay you to actually express your bets. They don't they don't pay you to sit in cash. So
Yeah.
the answer is there you go. We talked about this early on in the show. We can skip this. We talked about this also. We talked about situational awareness, but there's some of the numbers we talked about. Yeah, this is pretty interesting. So if you look at short interest equal weight versus the index equal weight return, right, which is in black, and you have short interest float there. If shipping opens and rates fall, basically betting on the piece means shorting the shipping sector, and we're not seeing that at all.
Yeah, that's interesting.
Yeah. So, it's basically gone. So if you're looking for a geopolitical read on what people think about future events in Hormuz and also the Red Sea, this is a pretty good picture.
So they're predicting what exactly?
They don't see an end to hostilities in sight in the near term.
Interesting. Yeah, I mean, do you blame them? I mean, how many times have we heard, "Oh, we're going to bomb to hell. Oh, we got a deal. Oh, they screwed me," coming out of Trump.
How long do you think this is going to go on for?
I don't know. He obviously doesn't want to do what I'm sure militarily they're advising him to do, which is take them, bomb to Kingdom Come, just take them out. As Trump is not a bloodthirsty guy. He comes across like he is, but he's not.
Mhm.
I just know that. I know the guy. He's just he's just part of his whole sort of the MAGA movement was not built on, obviously it was not built on endless wars overseas. It's protecting the home front, from immigration, whatever, terrorism. But he's in this thing now, and there's it's like, see, there's a debate in the White House. I mean, there's the JD Vance faction, which clearly doesn't want any more escalation, and
Yep.
there's probably others who say, you might have to do it, including his generals. So and he's
Right.
in the middle, and you can see him go back and forth. It's playing out in real time. Um, I don't take that as incompetence. We've seen real incompetence in office, and that was Joe Biden. I mean, that was just, you saw it in policy after policy that failed, and it was sold through a compliant media. Like, do we really need all that extra spending even after the world opened for COVID, and when COVID was basically over, or it was a much more manageable virus at that point? Something like like not even a bad flu towards in 2021. But he
Right.
kept spending and kept spending and kept spending. It was like nonstop. And then all of a sudden we wake up, oh, 9% inflation. No, that's really bad. Or like, he just opened the borders. Oh, we have criminals in our midst. I can't believe it. And this is not that. This is literally, I think, a president that's wrestling with his soul on this thing, that he may just have to bite the bullet and really fuck them, and it obviously hurts a lot of their innocent people, because once you start taking bridges out and turning off the lights, it's game over. The
Right.
economy
It's
shuts
game
down.
over.
Now,
Right.
maybe that's the only way to get the people to rebel, and is to do that. I don't know. Maybe that's the only way now, because these people are very belligerent, the leadership, and they're nuts. Maybe because they'll never, you would think after we, take them out like 80%, they would say, okay, let us run what we have left. But no, they want more, and so I think he's going to have to bite the bullet. He should have done it already, because the longer you wait, the closer the midterms get. The
Yeah, it's
Democrats,
kind of running out of time, right?
the Democrats have some real lunatics like running in this upcoming election, and you don't want to roll the dice on them. So I would just say, Bob, I think he's going to have to do it. And I would say, if I were a general, I would say, and I'm not, I'm just a stupid reporter, do it sooner rather than later.
So let's close the show on this one point. You know, someone asked me, and they said, "Well, what do you think? What risks what risk is the market not pricing in?" I said, "Well, it's obviously pricing in oil, it's pricing in interest rates. Um, has it priced in all the silence that Kevin Warsh says that he wants to actually do and not communicate? Maybe a little bit, sort of.
A little
Has
bit.
it
I
priced
think
in
so.
right? Has it priced in inflation? Yeah, I think people have gotten used to that. Um, it's certainly looking past the war. It's accept that, right? The one risk that I think would really freak this market out is if you had far right versus far left violence.
That's interesting. We've had
I
some
think
of
I,
that,
no, but I mean more.
like a
And
real, a
what
real
is more like a real like again,
Weimar Republic sort of, commies
yeah,
against the Nazis.
yeah, like that kind of thing. Uh, You know, um, I love history. That was what I'm steeped in. It's what I started my academic career in. That's what it's my major, and I've been a fan in history. And I always look for financial patterns in financial history because a lot of people forget that and they don't teach it anywhere, which is, I think, a huge mistake. But there's very few courses in any of the syllabuses across the country that teach the actual history. And Liaquat Ahmed actually talked about the first Great Depression of 1873. It's a great book. Um, he won so many different awards for his first book. But the I think the point I'm making is that American on American violence is an underpriced risk. And I think when you see things like Michigan, when you see what's going on here in the Commie Corridor, and you just see the willingness to dismiss whole cohorts of people and not have a conversation dox them, deliberately dismiss them, and denigrate, it doesn't stop. It's a snowball. So I think that's something that, maybe we leave it there for next week, but that's what I'm focused on. I think that's an underpriced risk.
I would say this, though, to that comment: the radical right, as we know it, like the sort of real, I'm not talking about MAGA, I'm not talking about conservatives, I'm talking about what is actually, by the way, it's a horseshoe. The radical right on economic policy and the radical left are both mainly socialists.
Then that's right.
Right? Nazis and communists were the same almost on economic policy. One preached national socialism, the other preached international socialism. They actually, their ends were achieved through the same means, which was murder, okay, and concentration camps and whatever. But the MAGA Republican, who would be the nominal, I guess, mainstream right wing right now, is not as out of the mainstream as the left in any example. I mean, we are talking about people who openly want to discriminate against white Americans, white males. They want to confiscate.
Forget that. Just forget that for a second. Just forget skin color for a second. Okay.
No, but they want to confiscate.
No, but let's just forget that. Forget that for a second. Blow up the Supreme Court, blow up the Senate, blow up the presidency, blow up the Constitution, blow up everything.
They just want to change the country
go on national TV and basically, go on national TV and say, hey,
yeah, I want to do all this.
Yeah. How do we do it?
And clearly, no property rights, the whole thing. So,
I mean, you're a fellow reporter on Fox News. I was like, are you for blowing up?
Yeah, she just asked the question. Shannon did.
And by the way, she said, no, of course we are. I mean, okay, so you're an anarchist. You're not a DSA person. You're
it's the same thing. But my point is that the pushback to the radical left, I don't think will be the radical right. The pushback will be for the normies that are center right, because we, people like you and I can live.
Okay. Show me those people. Who's doing that? Who's out there with a message that is a counter narrative, counter appeal, counter force to the weight that is the DSA?
Well,
they haven't made themselves known.
Well, they're not. You see, the radical, where it could get violent is if the U.S. Nazi Party, if the Nick Fuentes types, if they took the Proud Boys, if they took up arms. I'm just throwing them all together. I have no idea what their exact ideologies are, but the far right that's prone to violence would go to war with the far left. But the problem with that is those guys, and that's the 1930s Weimar Republic scenario, those guys on the far right often agree with the far left on a lot of their policies, and particularly with Israel. There's a horseshoe effect.
They're united in their hatred of Israel.
The opposition is going to be people like us who are in that radical middle to left, middle left, middle right. And on, you and I probably have liberal positions on some social policies.
We do.
We do. I do too. And, I have less liberal positions on economic stuff, obviously.
That's correct.
Particularly not on immigration, because I think immigration is a economic issue. You can't have open borders and a welfare state. It's just common sense.
Well, ask Spain how that's working out.
Yeah, I mean, it's stupid. But my point is that the opposition is going to be us. And here's the good news. You and I are not likely to pick up like a gun.
No.
We think the pen is mightier than the sword, so to speak.
Which we just did.
Which is what correct. We just did. And that's what we're going to keep doing. And I think that's where the pushback will be. It'll be the normies at some point taking over.
Well, whoever's listening, I hope you just listen to Charlie, because pick up your pens and start expressing yourself, because it's time.
Yeah, and it's expressing, and I'm going to end it on this. The New York City partnership wasn't too happy about my story that says that business leaders are just laying down and letting Mandami, crush them, and they're not moving any operations to Texas or Florida, which would be, make him pay an economic price as his spread socialism and all his other noxious ideologies. And they were like, "What do you want me to do?" They asked. Someone at the New York City Partnership said, "That's their big lobby business advocacy group." And I said, my point is, open your mouth more. Take, I don't expect you to lead a protest, but write op-eds, commercials. You got access to money, do it, because this is not good.
No. Well, on that note,
let's leave it there. Thanks, Bob. I'll see you same bad time, same bad channel next week. And thank you for tuning in for another riveting edition of Risk and Return. I'm Charlie Gasparino with Bob Sloan, signing off. See you next week.